I guess we get going. Hey, welcome. I'm Mike Healy. I'm with the Illinois Auto Dealers Association. Appreciate everybody coming. We know middle of the week, the early part of the month, it's tough to get out of the dealership. But we had a short window to get this thing in, so we appreciate you coming. We got a lot of good stuff, I think, to cover. So yeah, we've done a couple of them earlier in the week. We're up in Chicago and Peoria, and just had huge. We had over 450 people, so it was a squeezing deal. So this will be hopefully a little bit more comfortable here, and things will flow okay. So I'd say what we are going to do. All these slides that you see today, we're going to have them posted on our IllinoisDealers.com website. So if you want to revisit what we've got going on, they'll be right there on the home page, IllinoisDealers.com website. We're also videotaping this today, so again, if you want to revisit this, anybody else in the dealership, any other personnel that wants to come back and take a look at it, that would be great. So if you want to be on the video, ask good questions. If you want to be on a YouTube video your kids watch, ask some silly questions or something. A lot of good stuff to talk about. Obviously, the improved lease process, how it'll work, how the process will flow through CVR, some helpful training, CVR issues, and then we've also got the Secretary of State here. They've been grateful enough to come and talk about some relevant title and registration issues. So why I'm here, actually, I just the opportunity to be in front of you guys and thank you for your support and participation in IADA. We've got some real good presenters here. I'm actually one of them, so I'll be brief, but just want to let you know how huge it is to have you guys participate and be proactive in the process. Pete Sander here, recognize him real quick. He's the president of the Auto Dealers Association, so just can't stress enough, when our dealers get involved in the process, good things happen. So I thought I'd give you just 4 quick, tangible things that have happened recently because of your participation. One, obviously, is this lease deal. Now we're on more of a level playing field with the way most of the states do it. So dealers got real involved in the grassroots effort, contacted legislators, the governor's office, and now we've got a more favorable way to lease. Second thing, the other thing, again, CVR. 10 years ago, dealers came and said, hey, we really need to update and automate the title registration process. So began working with us, the Secretary of State, and now we've got, lo and behold, the CVR. So in the state of Illinois, CVR, there are more transactions run through CVR than any other state in the country. So it's a testament to you guys. You really embraced the program. CVR is your process. It's your program. It's a great job. What else? There was a crazy deal this year. There was a big push in Springfield. Had a legislator that wanted to end the Sunday closing law. So in effect, dealers would have been open 7 days a week. Even though the Secretary of State wasn't available, banks aren't open. So dealers got very involved in that and said, hey, we're not Walmart, we're not a typical retail place, and you did a great job of taking care of that. And one more, your retail collection allowance, 1 3/4% that you earn for collected tax and remitting. Every year that comes up, and the state's in a little bit of a financial situation. They're always looking for ways to save money, generate revenue. That comes up every year that they want to take that away. So again, we reach out to you guys and say, hey, contact your legislators. You've done a great job, and that's keep coming up, but stay active and stay involved. Like I said, a lot of tangible things happen, intangible things. So we appreciate your involvement, participate, your membership. The way it's going to work today. We're going to have Larry Dahl, our legal counsel, IADA legal counsel, come over and talk about the lease deal kind of from the 300-foot level, the overview and the history of it. Department of Revenue will follow up and dig into more of the details. And then after that, CVR is going to follow up and talk about how the process flows through their CVR system, and also some other CVR helpful tips that will help you out as far as processing it at the dealerships. And then lastly, Secretary of State will come up and talk about some of the relevant title and registration issues. So, if nothing else, before I turn over to Larry, I would like to recognize John Rader. John's with CVR. He's going to come up and just say a few words. John's one of the guys, he's been with us since day one in Springfield, in Illinois, promoting the thing. He's a national director now, but he's very involved in Illinois. he's going to make sure we've got all we need and all the support we need to keep this thing as good as it can be and to make sure we've got the best process for you guys. So, Matt, if you don't mind.
Thanks, Mike. You bet. Good morning, everyone.
Morning.
I don't know if you guys are how many of you live right here in the St. Louis area, but last night the weather forecast was pretty lousy for today. It looked like it was going to take forever to get here, so we all got lucky dice to bullet on the weather. I'll just take a minute, but I wanted to mention, is anybody by chance here from Miles Chevrolet? No? The reason I mentioned that was 10 years ago November, CVR started in the state of Illinois. And in the month of November, 10 years ago, we did 6 transactions. They were all done at Miles Chevrolet. They were our pilot dealership. Earlier in the month of November, we eclipsed 1 million electronic transactions for the year alone. So it's tremendous success for the state of Illinois. And it's kind of interesting because it's more so than any other place in the country, government, dealers, and private industry work together to really drive this what it was. No state grew as quickly as this did. No state had the success this state did. And we operate from California to Massachusetts, from Florida to Oregon. So I have the luxury of seeing the whole country. And you guys really are lucky in this state to have certainly a dealer association as good as you have here, but also the Secretary of State and Department of Revenue as well. It's always interesting. I always, over the years, whenever I'm talking to my team, we'll talk about, a dealer calls with a problem or something. Well, if you can't get them up with a good answer, kind of say, well, the Department of Motor Vehicle or the Secretary of State, as soon as you say that, they say, yeah, I know. So you easy to dump on the state all the time. And I've done that over the years, and it works real well. But the truth is it's not always valid. That this, in Illinois, it really is a state that works with us. Kevin Richards and I were talking a few minutes ago saying that we really tried, while we were going through growing the state and whatnot, a lot of states, when you have any problems, they immediately say, stop doing any business till we get this fixed. In Illinois, it was always like, let's keep moving forward, let's get it fixed, but let's keep moving forward. And that's really what made this state unique and the successful state. So we are most appreciative of it. We continue to want to improve the product. I think you'll hear from the folks from CVR later on about the things we're doing not only today, but in the future to make sure the state remains the best state in the nation. So I just wanted to thank you all for using our product and give us the feedback you do, and we want to continue to serve you in the future. So thanks a lot, and Larry, thank you.
Good morning, everybody. Thank you for coming out. We've been overwhelmed with the turnout this week. It's great to see all of you. Going to give you just a quick background before we get into the nuts and bolts with the Department of Revenue, but just to recap where we've been. First of all, changes to the way Illinois taxes leases. We've passed legislation twice, once during the Edgar administration and once back in the Thompson administration. Got it all the way to the governor's desk, only to see it vetoed. So this past year or so, with a real good grassroots effort from our dealers and working in cooperation with IADA and IADA working together, we were able to get it across the finish line. So just for background, starting January 1st of 2015, the way leases are taxed for fixed-term leases of qualifying vehicles is going to change. Before we get into that, just a fixed-term lease is a standard lease that's probably 99.9% of the leases that each of you do, if not more. It's a lease where the term of the lease is stated in the lease contract. If there's a charge because the customer doesn't turn the vehicle in on the stated lease termination date, that doesn't take it out of being a fixed-term lease. It's more of a liquidated damages thing. So that'll be a fixed-term lease. So it has to be a fixed-term lease as opposed to an open-ended lease where the customer has sole discretion as far as when to end the lease. Qualifying vehicles, we'll get into this more later, but in brief, any first division vehicle and certain second division vehicles such as RVs, most vans, trucks under 8,000 pound gross vehicle weight rating, motorcycles, things of that nature. Okay, just real quick, the way a purchase is taxed right now on a $31,000 car with a $10,000 trade-in, obviously tax the difference of $21,000. very similar to the way leases are taxed through the end of this year. Using dealer trade-in credits, a similar situation. A lease is taxed on the entire selling price of the vehicle, less any trade-ins that apply and go from there. Starting January 1st, leases will be taxed only on the value of the lease. So any amount collected by the dealer at the date the lease contract is signed, any money down plus the monthly payments. And it is all taxed at signing rather than every month. So multiply that by your rate. So even though trade-in credits are no longer available, the taxable base is much lower that you're working from. So you'll get, should see, be able to achieve considerable tax savings when you offer a lease. Like I said, I was going to be brief before I turn it over to the experts. There's my contact information. Also, anybody at IADA can be reached at www.illinoisdealers.com. We'll be available, as will Department of Revenue, afterwards for any questions that if you think of something that we don't get to in the presentation. And with that, I will turn it over to Kevin Richards, who is in charge of all the electronic commerce at the Illinois Department of Revenue, and has been a big partner with us and with CBR.
Thank you, Larry. I just wanted to take a moment and kind of echo some of the remarks that John and Mike already have stated. But wow, 10 years ago, 6 returns, $1 million plus this year. You know, that wouldn't be possible without the collaboration between the Department of Revenue, Secretary of State, CBR, Illinois Auto Dealers Association. I think it's a great example of organizations, both government and industry, working together and you know, coming up with a win-win for everyone. But we also want to thank you for all your support of moving things into the electronic arena. So we're wanting to make this new implementation as smooth as possible for you all and make sure that we have electronic programs running like we're supposed to. So we appreciate having the opportunity to come out today to talk about the new lease tax, and I think this is going to be a win-win for everybody as well. So that being said, you know, at any point in time, if there's issues, you can always contact us, as well as the Auto Dealer Association or your rep at CBR as far as that goes, as we kick off this new program. But with that, I'm going to turn it over to our experts, Fred Leeds and Sam Warren. But I want to again thank you all for your continued support.
Good morning. First, we want to thank IADA for inviting us to speak here today to help get the word out about the new lease tax. My name is Sam Moore. I'm an attorney at the Illinois Department of Revenue, and I'm here with Brett Lindsay, who's our top technical advisor in the sales tax processing area. And together, we're going to go over how Public Act 98-628 changes how you determine the selling price when you sell a vehicle for lease. This is a big change for Illinois. It's definitely a big change for the Department of Revenue, and we know that it's a big change for auto dealers and for leasing companies. And we've been working on rolling out this process for more than 6 months, so that we'll be ready on January 1st when it kicks in. And today we hope to educate you on all the changes that will be taking place. We also know that with any big change, there will be questions. So we're here today to try to answer your questions, and if you have questions that we don't have the answer to today, we'll take it back to the department and get an answer for you. The biggest points we'd like you to take away from the presentation. First, the tax structure hasn't changed. The retailer's occupational tax is still imposed on the auto dealer who sells the car for lease. The use tax is still imposed on the leasing company who purchases the vehicle for lease. What has changed is that the selling price that you use to measure what you're going to impose tax on is different. It's no longer the actual price the leasing company pays. Now it's the amount due at lease signing plus the payments under the lease contract. So it's the amount of the lease contract. The trade-off in that legislation for this reduced selling price is that you can no longer take a trade-in deduction when you're calculating your selling price for tax purposes. But there are many other changes, and so without further ado, I'm going to turn it over to Brett Lindsay to go through the slides.
Morning. All right, first off, you should have grabbed a packet on the table out front, just to let you know what's actually in the packet. And if you want to follow through or follow along as we go through this, one on the left-hand side is the PowerPoint, and then on the right-hand side I've actually given the informational bulletin on all these changes and copies of some returns. There are a couple of new returns, so if you want to follow along as I get into the details, it will help. Just a reminder that the returns that I actually have in there are blank returns. Do not use them. When you leave here, don't get copies of them. They do not have numbers on them. They are not pre-printed, so there's no transaction numbers on them whatsoever. There was a watermark on it, but when it was copied, it kind of faded out. So just, it does cause lots of problems for us when that happens. So. All right, Public Act 98-628 amends ROT and UT to provide an alternate method for determining the selling price. All these changes take effect January 1, 2015. Who tax is imposed on, like Sam said, will not change. ROT is still on the auto dealer. Use tax is still on the leasing company. No tax is imposed on the lessee. The law didn't change how motor vehicle leases are taxed in Illinois, only how to determine the selling price. All right, who must use the alternate selling price on motor vehicles to qualify? You must use this you must use this alternate method and the following conditions will apply. Trading credit is not allowed to reduce the selling price. Credit for tax paid on previously leased items cannot be used against the tax liability when it's sold at the end of the lease. And additional charges at the end of the lease, for example, excess wear and mileage, or retaining possession of the vehicle for 1 month. Those are now going to be reported on a new form at the end of the lease from the leasing company. And I'll get into more details on how this works. So, all right, to accommodate these changes, the department created the following new forms to report all lease transactions starting January 1, 2015. The new form ST556 LSE. This is a return for leases, and a new RUT 25 LSE, which if you're a dealer, you don't use that form, you use the 556, but leasing companies and people who go out of state and lease out of state and bring it in, that's the form they will use. And then the form LSE-1, which is the tax return for the leasing companies. And it's used to calculate additional tax due that wasn't previously reported at the initial sale. All right, we've also revised existing returns to remove the prior applicability for lease transactions. So the ST556 has, been revised to take off the reference to leases. The form actually hasn't changed as far as line numbers haven't changed. So all we've done is pull off any reference to leases and the instructions pulling off the reference to leases on the 556 form. Same thing with the RUT 25 form. All right, how is the selling price determined for leases? Beginning January 1, the selling price for leased items is determined in one of two ways. Either the actual selling price or the amount due at lease signing, plus the total amount of payments over the term of the lease. For example, using the amount due at signing plus total payments, using a rate of 6 1/4, total due at lease signing $2,000, monthly lease payment $14,400, which represents $400 a month for 36 months. The total selling price is now $16,400 and tax due of $1,025. Now, also out on the table was a sheet that had a calculation page. That page actually gives you a formula to use if you want to reimburse yourself for the tax due from the leasing company. So, from the lessee. The reason that is in there is because as soon as you charge tax, and that is all involved or all included with their down payment, it is now it increased the amount due, which would increase how much you're reporting and how much tax is being reported. So, and it really calcs out, you know, you're really short like $78. And then if you throw the $78 back into the contract the second time around, it really is like $4.97 or something like that. This formula, it's a very simple formula that you can do that the leasing company can reimburse themselves of the tax from the lessee, so that you can actually put it all in there. Okay? All right, what lease transactions must use this alternate selling price? The alternate selling price must be used when qualifying motor vehicle is sold for the purpose of being leased under a fixed term of a period of more than 1 year. As Larry said earlier, first division motor vehicles, second division motor vehicles, a lot of vehicles on there. I'm not going to go through the whole list and read it to you. It's in your packet. But examples are automobiles, pickup trucks, or utility vehicles with a gross vehicle weight rating of 8,000. Certain vans, motorcycles, motor-driven cycles, and motorhomes, recreational vehicles. For all other leases, you must use the actual selling price, then minus the trade-in to calculate the sales and use tax due. Just to give you an example of something, if somebody is leasing aircraft, watercraft, those items are not first or second division vehicles. They still fall under the old rules. All right, is the alternate selling price used for all lease transactions for qualifying items? No, even if the motor vehicle is qualifying vehicle and the lease period exceeds 1 year, you must use the actual selling price if the term is not a defined period. This includes leases with a defined initial period, with the option to continue the lease on a month-to-month or other indefinite basis beyond the defined initial period. And I'll let Sam come up and talk a little more about the contract stuff so that you have a little clearer picture on it. And then I'll be back.
So something we've gotten a lot of questions on as we led up to this was the statute requires that one of the factors for the lease to qualify for this reduced selling price, for the transaction to qualify for this lease, this reduced selling price, is if the lease is for a defined period in excess of 1 year. And as Brett said, does that mean that all these transactions that otherwise qualify would qualify? And the answer is no. And so here's an example, though, of a lease transaction that would not qualify for this reduced selling price. Our guess is, and Larry alluded to this, the likelihood is that you guys in the room here are not going to see lease contracts like this. You won't be working with them. Most conventional leases will qualify. But for instance, if a lease has a contract language that says, the initial term of the lease shall be for a period of 12 months and 1 day, and shall continue from month to month thereafter at the option of the lessee, until the lessee notifies the lessor in writing of the intent to terminate the lease. Any such notice shall occur at least 30 days prior to such termination date, but no earlier than 1 year and 1 day after the delivery date of the leased vehicle. This contract does exceed the year, so it meets that requirement, but it doesn't have the definite period aspect because the lessee can terminate at his own option. So the sale of a vehicle subject to this lease would not qualify for the new alternative definition of selling price, and the lessor must pay use tax on the entire selling price, minus the trade-in, of course. In contrast, if a contract allows for any type of lease continuation, does that automatically prohibit the use of the new alternate selling price? And the answer there is no. And this will be probably in contracts that you look at, that you are going to be using. And we just want to point out that there sometimes is language that may make you think that this is an indefinite period. Maybe I'm not eligible to use this lease for this reduced selling price. In those cases, you still would be able to. Sales of vehicles to leasing companies entering into otherwise qualifying lease contracts are eligible to be taxed under the new alternative definition, even if the leases also contain provisions that allow for a short-term continuation of the lease if the lease uses language identical to the following examples. So for example, we sometimes see on the back of the instruction, like sort of a boilerplate on those lease contracts, there's a return of the vehicle provision. And in that provision, there's language that reads like this. If you, the lessee, keep possession of this vehicle past the end of the lease term, you will continue to pay the monthly payments, but you agree that you have no right to keep this vehicle unless you enter into a written agreement with us extending the lease term. So if you see language like that, it's clear that they're extending it, it's going beyond the defined term, but it's embedded in this context of you've gone beyond the fixed term of the lease. So even though this is some extension, the lease wasn't designed to be extended this way. There are two other examples in your handouts. I'm not going to read through each one, but we took these examples from leases that we looked at. The bottom line here is you have a conventional lease. It's got language like this, returning the vehicle, that allows for some short-term extension if you essentially don't follow the lease term. That doesn't take you out of the reduced selling price. So, that was it.
Okay, what form will I use to report tax on leased items? Effective January 1, 2015, the 556 will be used for all leases, whether it's a qualifying lease for the reduced selling price or it doesn't. It's still on a new form that is the 556 LSE. Okay, whether the tax is calculated using the value of the lease. The RUT 25 LSE, like I said, as a dealer, you guys don't use it, but we did actually separate both forms so that the 556 now is a 556 and a 556 LSE, and the RUT 25 and the RUT 25 LSE. Okay, what selling price should I use when calculating additional municipal and county vehicle use tax? When calculating additional municipal or county vehicle use tax, you should use the selling price that you reported on one of those forms. So it does just carry over. Are there any other new filing requirements? Yes, we are also introducing the new form LSE-1. This tax return is for leasing companies. Form LSE-1 is only required to be filed for vehicles sold for lease after January 1. If the selling price reported on the return was the amount due at signing, plus the total amount of payments, and if there was additional charges. Form LSE-1 is used to calculate tax due on any additional taxable amount that was not previously reported. This return must be filed by the leasing company that has been leasing the item, that the user has titled or registered in Illinois, and Form LSE-1 is filed on a monthly basis. It includes additional taxable amounts from all leases for that month. So very simply put, as a dealer, the initial contract, once you sell it to a leasing company for lease, you're going to fill out an ST556 LSE and report the sale. When that vehicle is turned back in, if there is no additional charges, so no excess mileage, no excess wear and tear, no form needs to be filed by the leasing company. If there are additional charges, then the leasing company will have to file a return, because those are amounts that were not originally reported. Okay, which I'll get into this a little later too, but it really goes back to the original sale also. So the original location, and if there are 5 vehicles returned for the month, 3 of them have additional charges, 2 of them don't. The 3 that have additional charges would be completed on an LSE-1 and an LSE-2. An LSE-2 is basically breaking out each one of those transactions, and then the LSE-1 is a summary of all of those vehicles that had additional charges. If you're just a dealer, you don't have to worry about that form whatsoever. Here's an example. Lessee retained the vehicle 1 month beyond the term of the lease. The leasing company charged the lessee an additional month's lease payment plus excess wear and excess mileage charges. Form LSE-1 must be filed by the leasing company, report the additional charges. Excess wear and mileage $500, retaining possession of the motor vehicle 1 month beyond $400. The total is $900, and that would need to be reported on the LSE-1 and an LSE-2. So really, the LSE-2 is each one of them, and then combined on the LSE-1. Do I need to register to file Form LSE-1? Yes, if you're a leasing company that's been leasing the item that the user has title registered, you do need to get registered now. We have a list of most leasing companies. We are adding the account onto their registration. So if anybody is using MyTax on our department's website, most of them we will add the LSE-1 account to it so that it's there that they can file. Now, really think about this. The first time that this form can be filed really is February of 2016, because the lease has to take effect after January 1 of 2015. It has to be more than 12 months. So if they turn it back in, the first return really can't be until February of 2016. Okay. All right, do I need to register to file Form ST556 LSE? If I'm already registered to file Form ST556, the answer is no. It is one account with us. So CDR, all the electronic services, they'll have this set up, but I can tell you how the department will do it. If you use MyTax and you file electronically through us, when you go into your account, you will go into your 556 account, and when you want to go file a return, you click on the left, I want to file a return. The very first screen that pops up is you pick which one it is, an ST556 or an ST556 LSE. Once you do that, then it will take you to that return. So really, both returns are filed under one account. Will there be changes to existing tax forms? Yes. To implement the new legislation, we've revised both of the old forms as well as the amended returns to pull off all the references to leasing. How do I file forms 556 and 556 LSE? They can be filed electronically. You can use CDR. Also, any of the other dealer track and any of those will be should be all ready to go for you. Pre-printed paper returns. If you log into MyTax on the department's website, you will be able to print a pre-printed return from there. Okay. You can also call to get some forms. However, all of you know that we have been limiting how much or how many forms you get from us on paper. Yes?
I'm kind of new to this, so bear with me.
Okay.
Right now, if I have a retail deal, I can go to CVR, they carry my plates, my taxes, everything over on that. Will it still do the same thing when it's new lease, or I have to go to my tax site?
No, CVR will accommodate all of these changes.
So is it automatically going to compute the payments and stuff then, or the tax due?
Actually, what you put into CVR,
Correct.
You put a number into CVR,
Correct.
right? So the tax calculation sheet that I gave you, I'm not sure. I mean, really, that's through CVR,
Okay.
not through us.
Okay.
But I don't think that they're doing that part of it. But there are some things in the works for us.
So basically on a lease, I'm not going to have to go over to my tax site to do it because CVR is a
No,
lot easier.
you can still do all of that through CVR.
Thanks.
Yep. All right, how do I file Form LSE1? It has to be filed electronically. It cannot be filed by paper, so it has to be filed and paid electronically. But once again, this is the leasing company's return. And this will be on MyTax. And like I said, really, in 2016 is really the first time it should be due. All right, will the correspondence I received from the department change? No, the correspondence for these forms will all look the same. However, you will see some changes as far as like, instead of it saying ST556 account, you'll see where it says ST556 account / ST556-LSE. Because really both of them are on the one account. So that's really the only changes that you'll see in the correspondence. Otherwise, it all looks the same. Can I apply credit resulting from a 556 transaction to form ST556 LSE? Yes. So it is one account. So if you have credits on your account that came from a 556 and you want to use them against an ST556 LSE, then yes, you can use them across the two forms. Okay? Matter of fact, if you are short on one of them, we will apply it automatically. So it's just like now on regular 556, if you're short, we'll apply credit if you have it on your account to save you penalties. When can I claim credit for taxes paid on a lease transaction? If I sell the item at the end of the lease. If you're a leasing company leasing an item, it must be titled and registered. If you sell it at the end of the lease, that sale is subject to ROT, and it must be reported on a 556. If the selling price reported on the actual return for the original lease transaction was the actual selling price, then you can still claim credit for tax previously paid, which is line 10, which is the lease tax credit. However, if the selling price on the original lease transaction was the value of the lease, so the reduced selling price, you cannot use line 10. Can I claim a trade-in credit on Form SD556 LSE? All right. The answer isn't as easy as yes or no, because it really depends on whether it was a qualifying motor vehicle. So if you want to look at the return that I gave you in the packet, the SD556 LSE, it's pretty easy to look at it there as I'm saying this, because really it's step 7. It basically on the SD556 LSE, step 7, you're going to mark which selling price was used. Now, like I said, most of these leases are going to qualify, so you're going, the whole idea is to reduce the selling price and get lower payments. So most of these you're going to be able to use it. However, if the selling price for the lease transaction is the actual selling price, you can claim credit for a qualified trade-in on line 2 on the return. No, if the selling price for the lease transaction is the value of the lease. So looking at it, if you mark box A, then you cannot have anything on line 2, down in step 8. If you mark box B, then that's because it's the actual selling price, because it doesn't qualify, it's not a defined period, then you're still allowed to reduce the selling price by the trade-in amount.
So basically it's an open-ended lease then?
Yes, an open-ended lease. That would still be actual selling price. All right, now, just because you can't claim a trade-in doesn't mean that you can't accept a trade-in from your lease customer as part of the transaction, but you cannot deduct the value of the trade-in from the selling price of the lease item when calculating the tax due. So you can take it and subtract it after. Now, one thing I also want to tell you is if you don't mark a box on that step 7 and you leave it blank, we will not give you line 2. So if you don't mark it, you put something on line 2 and 8, we will take it away because you have not told us which method was being used. All right, here's an example. The customer wants to lease a vehicle. Retail selling price $10,000. Leasing company offers lease contract starting with that stating that the customer must pay $500 at the start of the contract and $200 per month for 36 months. The customer has a vehicle to trade in with value given of $500. If the vehicle does not qualify for the alternate selling price, the selling price can be reduced, and there's the example. So on the form, it would be an ST556 LSE, section 7, box B would be marked. The selling price is $10,000. You get line 2, and the amount subject would be $9,500. All right, if the vehicle does qualify for the alternate selling price, then the tax due is based on the amount of the contract, which in this case would be $7,700, $500 down, $200 a month for 36 months is what that's made up of. Because the selling price is the value of the lease contract, you cannot reduce this amount by the $500 value of the trade-in. And the amount you would use to calculate the tax would be $7,700. And then, like I said, you are allowed to use the trade-in after the calculation. And here's the example, still the 556 LSE, section 7, box A would be marked, and $7,700, and no trade-in, and at 6 1/4, $481. All right, then again, assume further the customer owes at the end of the lease an additional $300 to the leasing company. If the original form, ST556 LSE file at the start of the lease used the value of the lease, then the leasing company would be required to file Form LSE1 and report the tax due on the additional $300 payment. Like I said, it does use the original tax rate. Somebody asked what happens if the tax rate changed within the time frame from the original lease contract and when it was the end of the lease terminated. It is still using the same rate as when the contract actually was entered into. So, all right, just some couple examples here that in the return package that I put up here. One thing I do want to point out that we did on the ST556 LSE, we did split the information between the leasing company and the lessee. So this will make it a lot clearer for us. I know you guys are used to, on a regular 556, when you're leasing, you're putting both names on that one line, and it gets messy. It will help us and should be a lot cleaner. All right, also, step 6, the exemptions. They are not the same exemptions as the ST556. The reason is because not all leases qualify for the same exemptions as a regular 556 or a regular sale, and when you report it on a 556. So what we've done is we've pulled off some of these on the ST556, and we did not put the ones for purchases on here. So they are, this is really a cleaner way to go through these. Okay. The first one, which is exemption A, lease to non-Illinois residents, and it has a driveway permit number there in the state. There is no reference to the reciprocal, non-reciprocal chart on an ST556 LSE. Okay. If, for example, you sold, we're using Indiana just because the first day we had some questions come up with Indiana, but if you sold to an Indiana resident a lease, so you're selling to a leasing company, that the lessee will basically go back to Indiana on a lease. There is no tax due on or in Illinois and on would be reported on the ST556 LSE. Currently, you would take on a regular 556, you're marking F, other, and you would put Indiana lease contract. That would be exempt. On this, you're actually going to put it on A. Now, that is exempt to the state of Illinois. So if part of your deal collect Indiana tax for the financing, for whatever that you're required to do, you can still do that, but you would report that to Indiana rather than reporting it to us. Does that make sense? No? All right, C, the lease to tax-exempt government bodies. This, on a regular 556, this was exempt for exempt organizations, and it could be anything. Leases, the exemption only carries over for governmental bodies. A church or a not-for-profit organization that has an E number, they are not currently exempt on a lease currently. So this just makes it a little cleaner because the only ones that do qualify are the governmental bodies. All right, like I said before, the step 7, the selling price, and you need to mark which one that you are using. And also step 8, the line 2, and don't use the trade-in if you are using the reduced selling price. And just so you get a quick look of kind of what this return looks like, we do have it done. You don't have it in your packet because most of you aren't leasing companies anyway, but also it will not be available on paper. It will only be available electronic, but that's what it looks like. This is your summary page, and the LSE2 actually is what breaks down the original transaction, the original dates of purchase for the leasing company, and where they actually, the taxable location is. Some reminders: Form LSE is used to calculate tax due on any additional taxable amount not previously reported on Form RUC 25 or the 556 LSE. The return must be filed by the leasing company. The LSE 1 is filed on a monthly basis. Now, if there's nothing to report, so you, as a leasing company, if there's no additional charges and nothing to report that month, you do not have a filing requirement. Meaning that you don't have to file every single month and report 0. There's no filing requirement unless the leasing company charges the lessee additional charges that must be reported to us. All right, a separate LSE2 must be completed for each motor vehicle that had additional tax due, and those go together. It'll be real easy to do it if there's multiple ones, because these leasing companies, if they go through our website, they'll be able to do it very easily. And we're working on building that, but like I said, we got a whole year for it. So, all right, questions? and Sam's going to come back up here too. So, yes.
Nothing was mentioned about cap cost reduction or rebates. Are they taxed as well as down payment?
Yes.
So if they have $5,000 CCR money, that's considered cash, white cash.
Right. Essentially, the way the statute reads is that any amount due at lease signing plus all the payments under the lease contract are subject to tax. So to the extent that that's part of the calculation for amount due at lease signing, then it's that number is how we measure the selling price.
And that formula will be used most of the time, it sounds like, that way, doing it that way.
On most leases, most of your leases will qualify for the new treatment.
For the new program. 8,000 GVWR Escalade, does Escalade change that position?
Now that's not a tax question. I don't know.
Well, I'm just saying,
No,
that
that's a
those
good
big
question.
SUVs,
SUVs will qualify.
they used to fall under that.
Yeah, and 8,000 is the limit on it. So.
Yeah.
Right, and whether an Escalade is more than 8,000 or not.
Or under.
So if it's over, it's the old leasing rules?
Yes.
Right, so
the
it's
old-
just the way you do it now.
Yeah,
Let me
it
ask
still
you-
has to qualify. It still has to qualify before you can use the new lower amount.
Let me ask you guys another question. Have you guys ever heard of these pull-ahead programs where they let you out of a lease early?
Sure.
Yeah, is that going to affect this in any way if they get out 3 months early?
So the question is whether if the lease terminates early for some reason, will that somehow affect the tax upfront? And the answer is no.
No.
Because the tax is really on that initial transaction where the dealership sold to the leasing company, and that's done. The reason we look at the lease is just to measure selling price instead of the actual selling price. But what happens to that lease after doesn't impact the taxation on that transaction.
Which is similar to what happens now. If somebody ends their lease early, they don't get a tax
Yeah,
refund.
nothing really happened.
It's picked up by the leasing company. Basically, leasing company's paying the money back out of it, so the customer doesn't.
Are you saying that the leasing company makes?
In other words, the last 3 payments, they waive the last 3 payments
Right.
for them, leasing company's still liable for that.
In the back.
Very simply, this reduced tax, is it paid up front, or is it like, say, Missouri, where it's paid on the payment?
It would still be paid up front.
Thank you.
The only thing at the end would be if there are, excess wear and tear, excess
Right,
mileage,
but
and extra
still
would be paid at the end.
Paid
But
on the front of the lease, it's just a reduced tax now, that's the big
right,
difference.
right.
Correct.
One of the manufacturers, captive finance companies, held some seminars several months ago. We were all given the impression you just throw the tax on the payment, pay it monthly. So that, I think there's probably a lot of confusion that the dealership retrains the payment of the tax up front.
So help me understand your question. You're saying,
It refers to this gentleman's question, is they gave us the impression it was going to be like this.
I see, where the tax doesn't get paid until each monthly lease payment comes in.
Right.
So you pay 7%, if you're paying $300 before you collect the tax, your tax rate's 7%. You pay that 7% on $300 every month. That's
I see.
wonderful. It's not that at
So,
all.
right, it's not like that. The tax is still remitted up front. The way in which it is, like Missouri, is that now, instead of measuring it on the amount the leasing company pays to the dealership, we are using that lease tax, the lease contract as a proxy to say. But you still pay it up front, yes.
That part didn't change, it's just now a lower amount.
Reduced figure.
Yep,
So how it's taxed is different, but the way it's taxed is the same.
correct. Anybody else? Yes,
Okay, I'm gonna go back to your Indiana example.
okay.
If I'm an Illinois dealer and I lease a vehicle for, let's say, Nissan Motor Acceptance Corporation is the lessor, and my customer is a resident of, I don't know, Georgia, which we're reciprocal with.
Okay.
If I call to Georgia and I find out all the appropriate taxes, state, county, municipal, city, so on, and I use that total tax rate against the value of the vehicle, depending on the lease, which gives me the reduced amount, or the traditional contract, I'm still paying all that money for Georgia up front because we're reciprocal, correct?
Not on a lease.
You're getting into some things about, because the money you're paying is not to Illinois. The return you're filing to Illinois is an exempt return. You're going to file a return, you're going to mark box A, it's in the step where the driveway permit, no tax to Illinois. Now,
When we're
what happens with the
reciprocal,
tax
they
you
take
get?
it. Like Indiana,
Right.
they'll take it when we're reciprocal, so we will pay it up front.
You won't pay it on an Illinois tax return though. So I guess what I'm saying is I'm not sure what you pay to Georgia, but there's no tax owed to Illinois on that transaction. As long as they have a driveway permit, it's a leased vehicle that's being registered in Georgia, it's an exempt transaction in Illinois. You'll file an exempt return. With respect to Illinois, you're finished. Now, what happens with Georgia, I can't say.
Are you currently claiming that? I mean, you're, on that deal right there, you're filing a 556 and you're marking 5A. You really should be marking 5F.
Yeah, so.
Because it's Indiana lease transaction, which is exempt. If you mark 5A, all those, yes, it'll come in, and if you put Georgia, then yes, it'll charge you Georgia.
And you have to actually do the
Yes,
tax.
and you
every-
have to go through
That's
that,
fine.
but
Okay.
yes, yep.
Thank you.
So does the guy pay taxes down there
Into Georgia?
in Georgia?
Yeah, I mean,
He would pay it there.
yeah.
See, on a buy, we collect it.
On the buy, you have to do 5A
Yeah.
on the current
Yeah.
ST
That's
556,
what's confusing.
which you will still do. So on a regular buy, it's still a 556,
Right.
and then it's still marking the exemption A, and you would put the 2-digit state in your driveway permit.
And you only, on a buy, you only collect tax for non-reciprocal states. Even on a buy, if it's a state that wouldn't impose tax on a resident of Illinois if they went there, then it's an exempt transaction
Right,
in Illinois.
right.
But it's only the non-reciprocal.